Hello all and welcome back. I hope you're all doing really well. Thank you again for the love and support on the most recent video. Seriously means a lot to me. If you aren't subscribed though, make sure you are. There is plenty more crypto related content coming from me, particularly to do with the Hedera ecosystem if that's what you're interested in. Lots of exciting news just on the horizon for projects releasing to help further develop the ecosystem. Major play for me, of course, being Hbar and probably many of you too. So this is a great place to get a lot of information for yourselves. That being said, lots of different stuff to cover again in this market today. Lots of different news coming out from different places. And I also wanted to touch on some of the macro stuff that we tend to look at. So there was that Fed meeting minutes, I think it was yesterday. And obviously the information coming out of that is being crucial to the institutions within the markets as to what their next moves will be. So prior to the meeting minutes publication, investors have been pricing in another 75% or 0.75% rate increase at the upcoming July 26th to 27th gathering. So later towards the end of this month, there will be another hike, meaning that the fact both 50 basis points and 75 basis points remained on the table pointed towards the Fed acknowledging the impact of its rate rises on the economy, i.e. they are tossing up the devil you do versus the devil you don't with a either larger or less aggressive rate increase. The minutes reflected participants' concerns about rate increases having the potential for a larger than anticipated impact on the economy. And then a quote here from Jason Pride saying, I think that people are heavily focused on the terminal rate of what the Federal Reserve increases are, and the 50 to 75 basis point debate just points towards where you end up. And what he means here by terminal is the rate, the interest rate, the ending interest rate that the Fed is targeting in order to try and curb inflation. He notes that a 50 basis point hike would point towards a terminal rate of around 3%. So interest rates will land at 3% after the Fed ends their hawkish policy, while a 75 basis point increase indicates a peak of 3.25 to 3.5%. At 3.5% or above, the likelihood of a recession is around 50%. Of course, as they increase interest rates, the likelihood is you approach or get closer to a recession as you retract GDP because capital isn't as easy to access. Prior to the publication of the minutes, all three Wall Street benchmarks had endured a seesaw session, and while there were further swings between positive and negative territory in the moments after the 2 p.m. EDT release, markets built solid gains for the rest of the day. Dow Jones, SPX, and the Nasdaq Composite. So what we can effectively gather from here is majority of the markets are pricing in another larger rate of increase of 0.75%. However, the Fed are obviously concerned about doing that because of the terminal point at which interest rates will end up in the future, and we may see a 0.5% increase. A lot of this as well is going to come back down to that inflationary data that we'll be receiving over the next couple of weeks and months for previous months of CPI. So really, again, we're still in a seesaw moment as to what is happening with the markets. And of course, a lot of this is reflected and impacts the cryptocurrency markets as a whole. Just wanted as well to cover in this video about having a strategy. So seriously important stuff that many people may be blind to because they just buy into the fact they need to hold for a certain extended period of time in order to sort of come out victorious in these markets. However, it is also really important to have a well-defined strategy ahead of time so that you are almost on autopilot when these events happen. Many of you may have experienced this previously. You buy a project, a token, a coin, whatever it may be, and you hold on to it and it goes up 50%, 100%. And previously you may have been like, I'll take a little bit of profit here. You continue to hold on to it anyway because you don't know where it's going to end up, and you kind of lose your nerve when it comes to taking profit because you don't want to miss out on those last few drops of additional gain that you could receive if you just sort of, went down with the ship. And what tends to happen is you do go down with the ship. Things reverse quite quickly in these markets, and suddenly all that profit you were sitting on just gets evaporated. So what am I saying here? Well, something that I personally do, and you may see many other people talking about as a strategy, is to take incremental profits from those positions, which is not me saying exit those positions and never rebuy them. What I tend to do is I transfer those across into USDT or USDC, stable coins, and then I rebuy into those positions when things move against me. One of the first key levels I tend to look at personally is a 10% level. So we can see here, reason I look at 10% is that is the market annual average for the equities market. So year over year, roughly, it's somewhere around 7.5 to 8%, but I just round up to about 10%. So if a project that I'm investing in increases 10%, particularly in a short period of time, then I will look to take profits. And depending on the size of that move, it could be between 10 to 30%. I may look to take or shave roughly 20% of my position if it's in a short-term time frame. This is the next thing as well to talk about when having a strategy. The magnitude of the move is just as important as the time frame of the move. So if you see a 20% increase, but it's over an incredibly long period of time, say 12, 24 month period, you may be less aggressive with your profit taking strategy because it's been a slow incremental rise to that. However, if you see a 10, 20, 30% increase in the span of 5 days, that is a great signal to take in order to shave off some of that position. And then this increases. The ultimate goal for me personally is to remove any of my initial equity that I put into the positions in order to completely make my position risk-free. That's kind of what I aim for in some of these, particularly the more risky positions that I do take. Of course, there are some longer-term holds where a set percentage of my portfolio will remain in that for the long term. I'm talking 5 to 10 years, and I'm not particularly interested in selling any of that position in order to make short-term gains on it. For example, some of my Hbar holdings, I have an allocated part of that portfolio which I don't touch, and it just sits in like lock staking platforms, for example, Stader. And then you can scale this up. So if I see a 30 to 50% move and that keeps increasing, I may look then to take 40% profit on that position, and then use that 40% profit that I took to rebuy into dollar cost average into my positions. And it's all about having discipline when you're doing this. As I said, if you don't have predefined goals of where you're going to be taking profits, then you won't act on them when they come around. And the best way to do this is make a sort of either a notebook, jot it down, or use an Excel spreadsheet. Say my entry point, my average position for say Bitcoin was $1,000 or something. I know a 10% gain from that $1,000 would be a price of $1,100. A 30% gain would be $1,300. 50% gain obviously being $1,500. I then got set prices in my mind. I know at which I will be taking profit off the table from those positions. And then on the flip side, I will have re-entry points that I will have marked out. So if my aim is to reduce that position size or reduce the entry price for that position, I may then say, okay, at $900, I'm going to buy X amount. At $800, I'm going to buy X amount again. $700, I'm going to buy X amount again. Or things go really high, they shoot up to $2,000. I pull my initial equity out of it, and then I let it run. I'm not interested in taking profit anymore because that remaining position I have in there is completely risk-free. It's none of my own money, effectively. It's my profit that's riding out in that position. So less of a complete strategy that I'm providing for you guys. If you guys are interested in something like that, I may be able to put together some kind of spreadsheet to help a lot of you, as I've done in the past with things like Google Sheets. More than happy to look into doing that if there is the demand for it. However, what I am saying is make sure you take or have a strategy in mind for when the next sort of bull market comes through. And the same goes for bear markets. Having conviction is one thing, but also having a predefined plan is another. Of course, the reason for this being important is we do see these massive swings to the upside and to the downside. Bitcoin, again, is trading at that $20,000 level, and we may come down lower and we may go up higher. So making sure you're taking somewhat advantage of those and locking in those gains is, it's all well and good having paper gains, but locking in some of those gains is, of course, really important. And that is how you build portfolio positions. I experienced this myself personally in the equities markets first, where we saw historical rise throughout the end of 2020 and 2021. Unfortunately, I did take some profit towards the end of those positions. However, if I'd taken more profit off the table and I didn't just blindly hold, I'd be in a much better position today than I was or than I am now currently. So piece of not advice, because of course this is not advice, but a sort of piece of information to hopefully help you to make informed decisions. Anyway, let's jump back into some of the crypto news for today. So the Ethereum Testnet merge to proof of stake has been completed. So another milestone has been hit on the Ethereum network for this transition from proof of work to proof of stake. So Ethereum is moving one step closer to the final merge. The much awaited move of Ethereum from proof of work to proof of stake is nearing day by day. Sepolia's testnet has completed its merge and switched to proof of stake today. Testnet comes out as an important test before it's launched on the final mainnet. This is important to ensure that the tech is error-free before the final launch on the main network. And then obviously Ethereum is still waiting for the much awaited transition. There are still other tests that need to take place. So we had Ropsten first, and then Sepolia on the testnet, and then one final test before the final merge is the 𝗟𝗘𝗙𝗡𝗏 testnet. After successful completion of that, Ethereum will finally move to the proof of stake consensus. Check out one of my previous videos where I talk about this in more depth. However, this is obviously very bullish for Ethereum in general, and we should see from a sort of economic standpoint of supply and demand, the price of Ethereum rise somewhat substantially once this transition takes place, as there will be less sell pressure from the miners that are currently running the network under proof of stake. Obviously, it's very expensive and they have to sell portions of their Ethereum in order to keep themselves afloat and, profitable. So by the laws of sort of supply and demand, we should see some price appreciation there. Could be a nice way to make a little bit of alpha. Interesting tweet, or great tweet here, tagging me in from Mitchell. So clockwork and guaranteed. Solana once or twice a week without question. The network matters due to numerous security issues. Overall network concerns even after the update. The backer's integrity. When will crypto grow up? Solana facing another class action. So again, we can see that Solana are having issues. They've got several class action lawsuits against them, as the integrity of some of those founding capital members is being called into question. Not only that as well, crypto exchange BITSTAMP has just cancelled plans to charge inactive users a $10.20 or €10 monthly fee for inactivity. Again, they've walked this back after them proposing to implement it. We've seen similar stuff in the past from Crypto.com reducing their staking rewards. As soon as they come under some fire from the crypto community, they tend to backtrack on these pretty quickly. I think this is pretty good in general, that the crypto community are able to speak and stand up for themselves when things like this happen. And voting with your feet is one of the best ways in order to make these businesses listen. Just pull your capital away from the platform as soon as it inconveniences you and go to the next best thing. And then hopefully this helps to build a better and more transparent crypto space. Binance CEO CZ has come in saying the company has the largest reserve in the industry that they are aware of. This doesn't surprise me at all. Obviously, Binance being one of the biggest and most long-standing exchanges with the highest trading volume in the industry, never really had any kind of breach or incident that I'm aware of, and they keep going from strength to strength, and they will be a shining beacon, I think, in the community for a long time to come in the future. And it's great to see CZ at the helm as well with a lot of his principles. FTX CEO as well, Sam Fried, says the exchange has over $2 billion they could use in crypto industry deals if required. So this is them talking about potential acquisitions and mergers, buying up some of these platforms that are being liquidated in order to stop users' funds from being at risk. Of course, this doesn't come free. They're doing this in order to expand themselves, but great nonetheless to see that they've got some additional reserves in order to help some of the cryptocurrency market that is suffering. That CREMA finance hack that I mentioned the other day, the hacker has actually returned some of the stolen crypto coins. After a long negotiation, the hacker has agreed to take 45,455 Solana as the white hat bounty. Now we have confirmed the receipt of 6,064 Ethereum and nearly 24,000 Solana in 4 transactions indicated below. A follow-up compensation plan will be released in 48 hours. Regardless, this is still terrible for the Solana network. Another major hack. Unfortunately, the hacker has decided to be a white hat and take the bounty to avoid any repercussions from himself. Many of you that are obviously from the UK will know we've had a bit of a tumultuous time over the last 24 to 48 hours when it comes to politics. So we're not going to dive too much into it at the moment. Been a bit of a pantomime. However, the impact on the crypto industry in the UK is obviously significant. So Britain's finance minister has suddenly resigned from Boris Johnson's government, raising the prospect that the UK's ambitions to become a global crypto asset hub could be put on ice. Now, of course, Rishi was looking into cryptocurrency policies and to help drive innovation in the United Kingdom when it comes to the technology surrounding crypto. Obviously, with his departure from the cabinet, we could see some of these policies either be put on hold or completely U-turn depending on the policies of the new chancellor. So not the best news for the United Kingdom in general for cryptocurrency. In other hand, 70 plus Bitcoin and crypto ETPs, or exchange traded products in Europe, have worked without manipulation, says the Wall Street Journal. And this again is because they are becoming under a lot of fire regarding ETFs, so exchange traded funds in the US, particularly as that lawsuit against the SEC from Grayscale over the ETF they applied for being thrown out the window. So hopefully we can see some more developments on that. FTX CEO as well is now apparently saying the worst of the crypto liquidity crunch is over, i.e. pointing at some potential upside in the future if we're not seeing any more liquidations. The other piece of news on the press from CEXs or central exchanges is Voyager. So Voyager has just filed for Chapter 11 bankruptcy, showing that Alameda Research, or SBF, owes the firm $376 million. This is the same company that were hoping to bail out Voyager. So obviously not an ideal situation there. However, I did do some additional reading, but I couldn't find the articles that I read. And it basically spoke about how many companies actually file for Chapter 11 bankruptcy in order to make the process of acquisitions and mergers much more succinct, particularly over in the States. So this could actually be a play from Voyager themselves to file for bankruptcy in order to make whoever is acquiring them or any offers on the table a lot easier to go through in a shorter time frame. We should see some news on that in the future if that is going to happen, but it seems very likely that someone will come out and buy out Voyager as a platform, particularly if they filed for bankruptcy. Back around to Hedera, so Bug Bounty Round 2 is now live. So SaucerSwap Round 2 of the testnet is a go. Please note that you will need a testnet account, of course, to use the site. Check out my previous video. There are links in the description of that to show you how to make a testnet account. Very straightforward. And obviously you get some free HBAR on that testnet account, imaginary HBAR, if you will, in order to navigate these testnet products. Of course, they're still giving away up to 1 million source tokens total for this round of the Bug Bounty program. So if you guys do encounter a bug, follow these links and you can submit them. If it is a valid bug, you will of course be rewarded for participating and helping to secure the platform. Fantastic to see round 2. I'm not sure how many more rounds there are, but I'm seriously looking forward to the launch. Of course, being one of the premier dexes on Hedera, and it is a great experience. If you've not tried it, I really do urge you to do so. Of course, there'll be tons of videos coming from me once this does go live of how to make the most of the platform and also how to make the most of DeFi on Hedera. Several different strategies you can impose in order to get the best result possible. Anyway, hopefully you guys enjoyed this video. If you did, leave a like, drop a comment if you've got something to say. I do try and respond to as many of them as I possibly can. If you aren't subscribed, make sure you are. And of course, make sure you're following me over on Twitter, nearly at 1,000 Twitter followers. I do repost a lot of the content over there first, as well as additional stuff like infographics. Anyway, until the next one, I'll catch you then. Cheers.